We're going to try and have a little more of a positive hour than Paula Dean has had this week.
Yeah,
let's get to
a
the
bad
action.
day for her, too.
We're going to have that story coming up. Anyway, right now we've got Joe Bell, Schaeffer's investment research senior equity analyst, who is calling for a new high on the S&P before the end of the year. Scott Bauer is in the pits of the CME. Let's start with Scott. You know, again, this is one of those days where you've got so many things ending, but let's talk about new beginnings. We know where we sit in the middle of 2013, the second half of 2013. What do you see? Give me your crystal ball. Put it out there.
You know, I see continued volatility. And when I say continued volatility, I'm talking intraday volatility. You know, we've seen the Dow, you know, over the past couple of weeks, it seems like almost every day it's 100 or more points one way or the other. I think we're going to continue to see that because we're always focused on every micro piece of news that comes out. And now there's going to be a lot of uncertainty with earnings season coming up with how the China impact is going to, you know, maybe hamper or maybe lower some of our S&P 500 company guidances going forward. So I do think there's going to be a lot of volatility. I think that economically we're looking good here. I think we're going to, you know, not skyrocket like we did the first half of this year. I do think we'll end higher, but I would look to continue the volatility that we've seen over the last month or so. You know, the VIX has really set a new range over the last 3-4 weeks. 16 to 20-ish, where the prior 6 months or so, we saw a range of about 13 to 18. So that right there, you know, that's pushing up volatility, you know, 15, 20% into the marketplace. So again, I would look to continue that. And I think China's really going to be the big concern for earnings season coming up.
Okay, well, Joe Bell, let's talk more about the VIX. You know, the VIX calls, they are bets on higher volatility, and they usually spike during market down times, major market declines, and they have been spiking now, have they not?
They definitely have. You saw the market get a little bit skittish after the Fed announcement. We sort of had a snapback rally this week. Interesting thing we noticed, in the midst of the S&P 500 finding support near their former 2000 and 2007 peaks, market bounced. A lot of VIX calls were purchased up by institutions, a very popular hedge, more than 3-to-1 versus
Well, what is
puts.
that telling you,
So
Joe? Is that telling you that we are in for even more hard times?
Actually, the opposite. From a contrarian point of view, that tells me that a lot of the institutions are perhaps bracing for hard times. So whenever you have a lot of people bracing for that, that decreases the probability of that actually occurring.
All right, let me go back to Scott here and talk about the Fed. Again, we have heard from several Fed officials, Fed governors this week. They seem to be trying to calm the markets. That would mean potentially an end to the volatility that we're seeing if market participants listening. Scott, are you listening to what these Fed officials are saying this week?
I am, and to go back to what your guest just said for a second on these VIX calls, you're right. Institutions are coming in buying these calls. I have the contrarian view also as being a trader here for 20-plus years, and I think that's going to signal lower volatility coming up and a trend higher. But going back to the Fed, you know, I think that the Bernanke's remarks a couple of weeks ago were the same as they were last month, and he put it out there.
Well,
we
then
saw
why
what the market reaction is.
Well, then why the sell-off?
Well, because people were unnerved, and when people are unnerved, they typically sell and go to cash and try and go to the sidelines. But you have all the Fed governors now coming out and really trying to moderate that tone, trying to ease that tone, saying, you know, he put it out there, but it doesn't really look like we're going to pull back at all by the end of the year, and it's only if we get this unemployment number down, and only if this happens, and only if that happens. So again, I think the concern was people when they get nervous, when there's uncertainty, what happens in the marketplace? People sell and they move out to cash. And I think that's what we saw. But, you know, I think that I don't want to say market or the VIX top signaling, you know, a strong market rally, but the fact that we are seeing the call buying in the VIX outpacing, you know, puts, it's 3-to-1. That to me signals that, you know, we're probably near a bottom in the market right now.
Joe Bell, we're talking about mixed signals now, and I can't think of any area where we have more mixed signals than consumer trends. They're all over the place, but you feel comfortable that they're going in the right direction. In fact, you're betting on the XRT retail ETF. What encourages you so much about consumer trends?
Well, the consumer trends, you talk about the XRT or the consumer stocks, they've been strong for quite some time. You look at some of the specific stocks, a lot of people continue to doubt them. Consumer confidence at its highest level since January 2008. So we're getting some improvement from the consumer. I think a lot of the sentiment surrounding these individual stocks and that sector are still quite negative, and I think that really translates to potential cash that is on the sidelines and is going to flow back into that sector. On the other hand,
I got to push back for a second here because we had these GDP numbers. I know the market viewed them positively because they think it'll encourage the Fed to continue to print money. But doesn't that concern you when you see GDP numbers coming down as significantly from 2.3% earlier in the year down to 1.8% growth? That's kind of discouraging, is it not?
Yeah, on an economic front it is. I think the fact that a lot of times this bad is good, that's kind of the environment we're in with the Fed right now. It's also a matter of the timing. A lot of people got spooked by the comments by Bernanke last week. This GDP number comes in a little bit worse than expected, ratcheted down.
Right.
You all of a sudden saw some buying on that. So it's almost that bad is good right now during this Fed environment. Until we get out of that, sometimes that's kind of what we're dealing with.
Joe, I do want to bring up a couple of picks here that you've got because maybe it's because I haven't eaten all day, but you like Chipotle. I'm wondering if you still think that's a growth story because some say that the growth is over at that company. You also like Domino's Pizza as well. Again, are these growth plays in your opinion? Why do you like these two guys?
I still like him for the similar as the consumer discretionary in general. You talk about Domino's, only 25% of the analysts covering that stock currently recommend buying it. And that's a stock that's more than doubled this past year. So a lot of potential for upgrades. And remember, whenever those companies upgrade those notices go out to clients, and that's a lot more potential cash going into that stock. Highly targeted by short sellers. Again, short covering potential. Similar story with Chipotle. Chipotle is interesting simply because they had a strong earnings report beat on revenues and earnings back in April. Kind of a bit of a consolidation here. I think perhaps you want to buy the bottom of that trading range, and I think restaurants in general are going to resolve themselves to the upside throughout 2013.
Cheryl, I would have bet money you would have picked Ann Taylor, which is one of his picks, too.
I know. I was thinking about food.
My daughter's favorite place. All right, guys, thanks a lot. Joe Bell, appreciate you coming in. Scott Bauer, we're going to check in with you when the S&P futures close in a couple of minutes. Thank you.